No matter where you are in your trading journey, you will lose if you stop improving because the markets are always changing. What is your best place to learn? Where will you get the most information? That is from your own mistakes. Making mistakes are damn great because that is the place where you can learn and improve. And the only way you can learn and improve is to go back and analyze those mistakes, and that is exactly what I will be doing today. I took a screenshot of every single trade. I journaled how the day went, my emotions, and in this video I will reveal exactly where I could improve, but also with the opportunity for you to learn to analyze your own trades and your own mistakes, and maybe my exact improvements can also help you. We will analyze my mistakes into two different categories. We have the entry mistakes and the exit mistakes. Most traders only focus on the entry. They focused on, did I follow my setups rules? Is this right? Is this the right place to enter? Is this the wrong place to enter? But they forget to analyze their exits. The exits as important or even more important as your entries. If your exits are not good, then your entries are worthless. But of course, exits cannot exist with good entries. So let's start with the first part of my mistakes, and that is my entry mistakes. What am I doing wrong when entering a trade? And going through all my trades, I found three main mistakes. For 4% of my mistakes, I do not wait for a volume confirmation to enter my trades. 33% of my entry mistakes, I enter too close to a daily resistance. That means the daily chart does not confirm my setup, or I enter too close to a major resistance level. But the mistake I do the most often, 60% of the time, I call this a yellow line mistake. That means when the price action does not give me a confirmation to enter. So right now, knowing my biggest entry mistakes, now is a perfect opportunity to fix them. How do you fix those mistakes? You probably think, yeah, just do not do them. That is easier said than done. It is the same way as saying somebody who's trying to lose weight and start a healthy lifestyle to just not eat candy. But what is the best way to stop eating candy? Remove all the reminders of your bad habits so you will not be tempted anymore to take those unhealthy snacks. And it's the same way we do have to approach it with trading. So in order to stop these mistakes, we have to look for the underlying problem. Do not wait for a price action confirmation or a volume confirmation or entering too close to a daily resistance. They have one big underlying problem, and it's called FOMO, the fear of missing out. I do not want that a price goes away without me. I want to be in the trade from the start, from the earliest point. I know that making these mistakes have cost me a lot of money. So right now, as part of my preparation, I write down checklists. And when I'm waiting to take a trade, I'm constantly reminded of my three biggest flaws when entering a trade. If I do not follow these rules, I'm just gambling, and that's a dangerous way to think, especially in trading, because you cannot trade the market you want to be in. You have to trade the market you are in. And these results become only more clear when analyzing your own emotions and analyzing your trades so you can do something about them. But when analyzing your trades, you have to be very careful with another human bias, and it's called the hindsight bias, because after the trading day is over, it's so easy to see what you should have done, what you could have done, but what are the things you could actually see during the day? You make logical choices, or were you too fast? Because in hindsight, obviously you were a better trader because you think, oh my God, I was so stupid. But when the market is unfolding, it's a total different view. It's the same way when you drink alcohol. That's basically when you're in the market. You're too much focused on a certain way. When you're analyzing, you have to take a step back and be realistic. Are your setups there? Could you see that? Because otherwise you will be prone to the hindsight bias and keep on making the same mistake after same mistake, and there will not be improvements with this information I have now. Did I make the right choice or the wrong choice? If you made the right choice and you lose, that is perfect. If you made the wrong choice and you lose, that is a mistake. And if you make the wrong choice and you still make money, that's a dangerous precedent here. But that does happen. So please, when analyzing your trades, be very careful with the hindsight bias. Because of my entry mistakes, I've now set systems into place to not make those mistakes again. The first is an entry list where I write down my 3 criteria where I make the most mistakes on. Just as pilots and astronauts have checklists, is this checked, is this checked, is this checked, that they have to repeat in them to function on the highest level, you should do the same with your trading and have a checklist of your setups so you know for certain what you will do every single time. Because it happened for me a few times in the past where I was trading, but I forgot one of my important rules. I just forgot about it. And then I thought, oh my God, I didn't check for this. That's why I put a checklist it's part of my trading preparation. The second thing I do is right now, instead of searching for things that confirm my theory, I search for things that makes my theory invalid. So when I see something happening, I said, when would I be wrong? Am I wrong in this decision? And why would I be wrong? Take the opposite side of try to look for things that break your theory. And if you cannot find things that break your theory, that's the perfect way to combat the confirmation bias and to keep on being disciplined. And it happened for me sometimes that I take the trade and have a bad feeling about it, but all my rules are met. I have no reason not to enter except my own feelings, and I enter the trade. You don't have to believe your feelings. Your feelings are not helping you in the market. Instead, analyze your feelings. What do they tell you about the market you're in? Don't listen to them, but use them as indicators. What do your feelings tell about the market conditions? If I act the exact opposite of my feelings, I will make way much more money. Because when I'm winning, I want to call it a day. When I'm losing, I want to keep on going and keep on going. But on the days that I'm losing, that means the days that the market doesn't give a lot of opportunities. Those are the days when I have to step away. The days that I'm winning, that are the days where markets give opportunity. And that are the days I have to keep on working and keep on grinding to get the maximum out of the market. That is how it works. So remember, good trades, good entries do not have to feel good. They have to follow your requirements. But right now, let's focus on the exits where I make mistakes in exiting the trades. And this is the biggest reason why I started doing this analysis, because I had a feeling that I left way too much money on the table, and my analysis showed that I left way too much money on the table. So this is here what I will change. In my pre-market setups, best way to exit the trade is exit 75% at the open and let the last 25% run. I used to scale out on the way to the top, but as you can see, it's leaving time after time way too much money on the table in the pre-market. In the first hour and a half of trading, that's a bit different. In the first hour and a half, I have to be way more conservative. My analysis showed that it's way more beneficial to take 50% close to a daily resistance. If the price cannot reach the daily resistance level, then I take 50% off where a double top could be forming. And in the same way, I will also keep on moving my stop losses under the latest pivot point or when a new setup appears. Or I can add to my position, and then obviously my stop loss moves as well. But when the stock market passes 11 o'clock or around 12 o'clock, 11:12, all the possible reversals should have already happened. So I will be less conservative in moving my stop loss and give the price way more room to run until the end of the trading day. And obviously I will also take 50% of my trade on an important daily key level. These changes I have implemented are very important because my win rate is fluctuating around 45%. My average R is around 2.5, 3 hours. So when I win big. But I lose more often than I win. There is this saying in trading that says you cannot go broke taking a profit. But I bet you, and if I taking profits too soon, I will not be able to pay for my losses. This is why finding a strategy that suits your needs is so important. I absolutely love my setups, my strategy. And another important thing that I have discovered is from the moment I make one mistake, it's very easy to go make a second, a third, and a fourth, and a fifth. So when I see that I make one mistake, I have to stop the domino effect immediately. So when I make one mistake right now, I just stop trading for the day. But my biggest takeaway of my analysis is trade the markets that you're in. The markets is an endless pool of opportunity. Not all the days will be eventful, not every day will be epic. But if you accept the small losses and keep on going when you're winning, in the end, the only way to get better is to learn from your mistakes. Looking where you leave money on the table and where you give money away to the markets and fix those things. That is why I analyze my trades, and that is why you should do as well. But if you want to know my exact setups and how I trade, you have to watch this video where I show you my favorite day trading setup. See you there.